The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, second hour I'm doing. I did Larry's show a little earlier at 9 o'clock this morning. It was my pleasure. Larry's on vacation. I'll be doing his show again tomorrow. So, very interesting market. All the Dow needed was to go about another 80 or 90 points to make that leg D, and then all the little duckies are in line to say, okay, there could be a breakout to the upside, but it has to be something like Dow 80 to 120 points from the all-time high of 18,622. Or if it's just slightly higher, then as I say, all the little duckies are ready, and we should start to pull back and have some kind of a consolidation. Let me run the numbers. And then what we'll do is we'll go to our first caller, because that I think is going to coincide with what I'm looking at. So here we go. The Dow is up 4 at 18,537. The S&P is down $1.50 at 2180. The comp index is down 10. And this is big that the comp index with the IBB, which is the NASDAQ iShares Biotech, down 3, almost 4 at 290. So all of this comes into the potpourri of things that we're looking at. Compex down 10 at 52.15. Gold is up 3 at 13.49. That means if the dollar's down, yep, the dollar's down a little bit. Dollar's down 44 cents at 95.69. The relationship there, the counterpoint, Bach counterpoint relationship is still there. 2021 is the silver up 36 cents. Platinum's up 22 at 11.78. Now, copper had a big spike. It's up 3.5 at 219.70. Still within the range, but it's good that it's holding in that range. Crude oil is down 42.64. It's down 13 cents. Bonds are up 7.30 seconds at 172 and 30 seconds. So there are a couple of things I want to look at. You see this E-mini here? This has gone to an alternate count. For now, I'm just calling it an F. But the action so far from a peak F, if today there is no new high above 2183.50, if this is an F, then by, what's today, Wednesday afternoon, by Thursday at this time, by Friday the latest, the E-mini should be below 2165. It should be down 11 points from here or more. And that would say, okay, folks, now you've got to be really careful. I think there's just enough residual strength to maybe get to that leg D in the down, and then we can look at the downside. Meantime, the weekly chart, look at this, right there in that up channel, resistance, what I call the Chapman wave, inside track resistance zone. Let's look at the cash S&P, SPX, look at this. Leg D, same thing, doji candle yesterday, hasn't made a new high today. It's going to be tough. Okay. So there are a couple of things going on, and I'm going to be discussing it in tremendous detail coming Tuesday night for my subscribers. It's a webinar, free webinar for subscribers. I've said on the webinar itself, one of the slides says this is probably one of the most important webinars I've given. I don't mean this year or last year, ever. Because what it does is it starts to set in place those icons that we've been looking for years, that I can check off and say, okay, the match of the 1920s, we've got this, we've got this. We don't have a couple of things, and that's going to be really important. That's the reason why I think we will go higher, even though I'm anticipating a pretty sharp sell-off at some point, a sell-off that really has points, but it doesn't really have time. I'll be talking just a little bit of politics, not really the politics. It's the politics of politics. Why? Because I think it's really important that we know what we're looking for and what the candidates are capable of saying and doing, so that we can prepare for that. And within that context, I'm going to be looking at sectors. Is this a sector that you should be going along here? The IBB. Is this a sector that you should be going long here? The SMHs, the semiconductor index. Is this a sector that you should be going long? The PPH, the Van Eck, Vectors Pharmaceutical ETF. Hey, wait a minute. What about the PPA? The power shares, aerospace and defense. What are we looking at when we look at bonds? What's the relationship of the Japanization of our bonds to what's happening in Japan and other countries are vying with one another to find the cheapest, to get the lowest rate? How long can that last? Is there any chance that we could, in fact, make what I call a reversion to the mean by having interest rates at some point start to skyrocket to the upside? Are we going to Zimbabwe our interest rates? Is that what's going to happen? What's going to happen to our stock market? Where do you go? What do you do? That's why I consider this to be one of the most important. Why? Because the coda phase is in place. It isn't just in place. It is at least a third of the way into it. And what is the coda phase? If you know anything about music, you know that in the classical music, you get your theme, you get your opening segment, you get your first movement, you can get your second movement, whatever it is. But every movement will have the good chance of a coda section. The coda takes all the ideas and wraps it up. And at any point, it'll finally give that 5-1 conclusion. Bum, bum, bum. But on the way, if you know Beethoven gets these divergences. As you think, the clock's running out on that movement because he's investigated every single idea. Where can he go to? He just takes off and goes somewhere. And then as you're about to throw up your hands and say, wow, I mean, that's amazing. Where did he get that from? How long is he going to go on for? He goes, bum, bum, and it's all over. So that's what we're going to be looking for. Yeah, and that's the reason why I consider it to be one of the most important, and not, you know, the other ones I've discussed. I had a lovely email from one of my subscribers saying, thank you very much from the webinar the last webinar you gave. I took some of the instruments that you're discussing that were on the long side, the sectors and stocks, and I really have benefited. Thank you very much. I'm going to be trying to do the same thing now. In fact, as of today, we are starting to try to set up in preparation for some kind of a decline coming up fairly soon. So I'm going to go to Ben in Tallahassee. Ben, how are you?
Excellent, Basil. Thank you.
Sorry about the little preamble, but if I didn't do it, you know me, I would have forgotten, and then I would have finished it.
No problem. One of the things I noticed, I had a quick question on the Dow, but also I was watching this VIX, and it looks like it's 3 cents away from making a leg B in the 120-minute chart with very good stochastic. So,
okay, give me 1 second. I'm going to go to it right now, and we're looking at the 120-minute chart. Yep, it's just about okay. So let's just talk about it because I will be spending.
Okay, go ahead.
I just want to say I will be spending a lot of time leading in over this coming weekend, plus obviously in the webinar, talking about our relationship with the VIX, and we'll talk about that. So your question, and then I'll deal with it as soon as we get back.
Yeah, the main question is, on the Dow, I know we're waiting for that magical leg D, but what would define a C1, C2 versus a leg D?
Okay, perfect question for now. Absolutely perfect. I'll be right back with Ben, and we'll discuss what the heck is a C1, C2. I'll be back. Basil Chapman, Dow's down 12, S&P's down 3.5. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back, and we're back with Ben in Tallahassee, and what we're looking for, I'm going to go back to it right now, is the Dow. And the question is a really good question. It's something that I pondered. I didn't expect that it would actually happen, and it could happen. And the question there is, in the Chapman Wave methodology, let me just grab this right here so that I make it real clear for new people that are listening to the show. We always have new people from all around the world. In the Chapman Wave methodology, it's a very simple technique. There's a price that pulls back. It makes a little bottom. You identify that bottom, and from that low, you can start counting peaks to the upside. The anticipation is that as long as the left side low, the initial low, is not pierced even by 0.01, that becomes a low of importance. And you can count each successively higher peak, which is alphabetically labeled, uppercase on the way up, lowercase on the way down, and it goes to at least 4 higher peaks, peak A, B, C, and D. That's all it is. Very simple technique. 0.01, or if you're trading a futures, something like that, maybe 25 cents or 10 cents above the previous high starts the new leg, and that's called a floating leg. And until it makes a peak, that's what it's called, floating. And then when it gets to D, it doesn't mean to say it can stop. It just means that that's where you got to be really careful. For those of you who've been watching my show, you'll notice that Ds are always, there is the potential there for pretty sharp pullbacks and deep and time. So then I developed a technique that said, wait a minute, I've gone to so many peaks that are at C. I actually started the technique when I found that there were occasions, especially when I was getting the Chapman Wave stalk leg formation, and that's what this is all about on the right here. I'll show a perfect one in a little while, that where the Dow would go to a D and the diamonds, DIA, would go to just a fraction or exactly the same number, but not make the D, or vice versa. And then I discovered that I can call it a peak C1 and a peak C2. And the peak C2 essentially says, didn't make it, but everything about the action is negative, and that we should be coming down as if it was a D. So be prepared and stop looking at the long side until you're convinced that you're going to go much higher. And that's really what Ben is just correct. Ben, that's what you've just brought up, right?
Correct. And, just to add to that real quick, is it looks like yesterday in 12.9, there's that doji. I don't know if that is part of your C2 analysis or not.
There are 2 dojis. There's what I call a doji. There are 3. The doji at the high at 18,622. That's a small little candle that looks like a plus sign. There are a number of them going into that, and then we pulled back, and a number of them on the way down, and then all of a sudden on the way up, you failed with 2 doji candles, very small plus sign candles. So all the requisite ingredients are there, and now I've got to go through a different mental aspect, and I have to say, okay, if that's the case, where is the 120-minute chart? Oh, well, it turns out the 120-minute chart made a peak D yesterday, and therefore all the little parts to the equation are sitting there and saying, okay, now you got to be very careful. So now the question is, if you don't mind, I'm just going to run this through so that we're talking apples to apples. Daily chart of the Dow, SPY. The SPY is made a peak E. If there's no new high today, it could be an A, but more likely it's going to be an E because the stochastic is pulling back, although it's still strong at 85%. But the MACD did deflect lower. So that says, all right, be careful. What about the QQQ series? Oh, look at this. QQ series happens to have a peak F if there is no new high in the next day or two. So we've got to, once again, say, what about the IWM? The Russell 2000. Alternate count, F/A. Sharp moved down today, down 81.81%. That's one of the bigger moves of the day. The other indices have not gone there. Let's look at the NYA, and this is the daily chart as well. The NYA is the very broad New York Stock Exchange. Now, here's the question. This is one of the reasons why I thought, hey, I think we're still going to at least try for that D, and that's because the New York Stock Exchange made a leg C, maybe a peak C, and the weekly count is just so weird. It's a G/B. It's kind of in the middle of nowhere. It made a D in the 120-minute chart, and that is enough, at least on the short term, to say, hey, you can't ignore that. Just keep it in mind. And let's do another one here. The Q's, IWM, I forget. Oh, I did the IBB. I'll do it again. That's the iShares. Made a leg E, a peak E, and now with the move under the 200-period exponential moving average, under the 9-period moving average, going towards the 200 at 285, I have to consider that this is important, and as anyone who takes my service knows, we just missed shorting the IBB today. Would have been the first time we've done anything with it for a long time. And the SMHs, I don't remember if I did it now or if I did it in Larry's show, but it is an alternate count, and it could be an F. I've typed in an F, and that's an F also in the leg up in the weekly chart. So now let me go to your question. And the answer is, the question is, could it be a peak C1, C2? The implication behind your question is, if it is, and all the other indices are really don't look like they've got alternate counts at this particular time, it looks like they've made some kind of a top of importance, what should we do? And my answer to you is to be very, very careful. There's a real good chance that based on my newsletter, that this is going to be one of the highest cash positions we've had in quite a while, and that's telling us a story that you got to be pretty darn careful at this particular point.
Just to be clear, I'm short right now, and things are looking very good. How are you short via what instrument? I did the TVIX yesterday.
All right, very good. Okay.
And then the question is, what I've got is, what would convince you that it's a C1, C2? I mean, can you say if the Dow breaks a certain level, it's a C2?
Really good question, because that obviously has to be the very next part of the puzzle. If the 9-period exponential moving average in the Dow right now, the daily, which is it's being covered at about 18,476, to about 20 points away from where we are. If the Dow closes underneath, I'm going to have to give it a little bit of room because of the characteristic of this H pattern. If it closes at underneath 18,440, but absolutely if it closes under 18,400 in the next 2 days, I have to consider that we've made some kind of a top, and that top is a top that I will go from a sell signal if that's the case in the Dow, because the technicals, the MACD is down and the stochastic's now at 72%, but it'll only go to a sell mode if the Dow closes under 18,200. And if it does that, then the weekly chart will immediately go to a sell signal, not a sell mode. And I like to put all the little ducks in order So that's the way it would be. If by the end of the day there's a sudden bounce, I'd say, yes, we'll take that bounce and maybe trade a little higher if we can, but you've got to be very careful at this particular point.
Okay, now I don't know if I'm sure you probably noticed this as well, that as the Dow was even up 30 or 40 points, the S&P and the Nasdaq were lagging. In fact, they were negative. So my thinking is with the TVIX on the Nasdaq side, that even if the Dow goes up, it may go up by itself.
So that's something that I was taking note of earlier on. I was saying to myself, wait a minute, the S&P, yesterday the Dow was stronger than the S&P. Actually, can you hold on?
Well, I'll leave it at that, Basil. I don't want to chew up all your time.
All right, that's
Thank you.
fine. I will talk about it, but you can listen afterwards. Thank you very much for calling. I'll be back. Dow's down 40, S&P's down 6.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I didn't have a chance before, but I'm going to do it now, that the E-mini, the 10-minute, had a very nice move from the lows early yesterday. It kind of went sideways, and then it had an ABC and went to a D. Around about the 21, was it 80? I can't remember the exact number, 2181.50 at 5:30 this morning, and retested it twice and then failed. And then it started to come down. It broke the cup formation. It came down. I thought it would hold at this particular point, but then I didn't do anything with the chart because I was on my show, and it broke that support, and now you've got, look, like a 1-to-1 to the downside. This has to be a period where there's at least an attempt to rally. And if it can't rally, you've got to be very, very careful. So the two things. One is there's that, and there's another thing right now, and that is, look, this is the SPY 5-minute chart, the spider, that's the S&P trading vehicle, the SPY, SPY, trading at 217.49, down 69 cents. And this is the USO. Green is the SPY, USO is red, and that's oil, the oil fund. And look at the symmetry between the trade, and then there was this big spike up and then failure in crude oil, and it came back down, and it's also done a one-to-one. This is an area where both of them have no choice. If there's going to be any rally towards the end of the day, it has to happen now, because if it doesn't, crude oil, there are moments of independence where the market just ignores, and there are moments where there's symmetry, and right now there's symmetry. So here's the VIX index. That's what I wanted to discuss. And the reason why I'm going to spend a lot of time on it during my webinar coming up next week. Oh, let me also mention the expert on candlesticks, Steve Rhodes, giving a webinar tonight. You know, we're all about education right here at TFNN, and this will be it. So please join Steve this afternoon. Just a real good deal. And as I say, I mean, he really takes it. When Steve does something, he does not do it half-heartedly, and he always does a great job on webinars. So just consider that. I'm hoping to do mine on Tuesday week, and that's going to be, as I say, one of the most important ones that I've given, only in timing, because we are now, as I say, into this coda phase, and just how the coda phase is going to act or react when it concludes. Those are all things that I'll be discussing. So the VIX index, the VIX right now up 4.46%. It's at 12.18, up 52 cents. It made a trough, potential trough F. This is going to be very serious, because if the volatility index yesterday made a low of 1118, I think it was 1118, I'm sorry, 1102, didn't update that, 1102, then there's room to go. And what I said to subscribers over the weekend, I said, this is the area we've got to be real careful, because this is where you can get some reversals in the VIX index. But in fact, the monthly charts haven't gone to this low. You can stay in the low area for quite a while. That's the reason why I'm saying there could be an upside reversal. It could be very steep, very quick. But if the VIX doesn't go into the 19s, but stays, in fact, in the 15s as the market starts to pull back, you could get a very nervous reaction to the downside, and then maybe start a new move to the upside. That's my thinking for now. I'm not going to lock in, but that's what I am. And as I say, there's a real good chance that we're going to take profits in our long positions, and we're going to, or the race stops, and we'll be out, and we'll be looking at the other side of the coin. So let's do this. I mentioned the different sectors that I'm going to be discussing. What do you do? What do you do about this? SLX, Peak D. This is the Van Eck Vector Steel ETF. Is this it? Is this leg E with a peak E coming? Those are the things that you want to know about. Those are the things I'm going to be discussing. Why? Because they've been very important. Look at the fantastic rally from 15.30 to the 32s. That's almost a double. That is a double in the steel area. Look at U.S. Steel X. Down $1 today, 23.25, having hit 27.64 after being way down in the 6.8 area back in early 2016. That is a whopping move. A lot of these things just need time to recuperate, but I'm not sure that some of them are going to recuperate. I think some of them are about to experience another one of those more serious declines, and I'm talking about different sectors. Let me just show you something else. Look, the Dow has failed to make that 16,622 level by 30 points, less than 30 points. We're going to be watching this one closely. 120-minute chart did make D. I think there was a chance of going to a higher high. Still a possibility, but we'll have to let this play out a little bit longer. So it's achieved the D. That's very important. And I just want to check this here. Okay, so Marshall in the den says, Trin calling for rally within one day? No, not yet. In fact, the trend hasn't even noticed that the market has pulled back. It's trading at 1.03. Nothing there. But the 120-minute chart has gone to a leg B in the VIX index right there, leg B. All right. So now there are a couple of things that I want to do. And I'm just going to do this in terms of relationships. I had a one-to-one, a target for the Dow of 18,660. And it was based on the move from right here. It was based on the relationship of the move from 17,063 to 18,002, and then the pullback, and that should have given us a one-to-one that took us somewhere into the 18,660. So we got to 18,622. That's pretty darn good as a relationship, right? That's the lightning bolt that everyone in Tiger, all the Tigers talk about. That's the one-to-one, A to B equals C to D. Well, we've almost achieved that. So many, as I say, of the prerequisites, many of the little sectors, the little ducks that I call them, have done exactly what they need to do. The only missing link, as far as I'm concerned, I even ignore the NYA. The only missing link, and I have to put a down arrow now for U.S. Steel, right there, down arrow, and that's in a sell signal to be a sell mode if we close out this way today. Only reason why I've wanted to hang on and try to get for our long position in the Dow, and it's still long actually, with a nice, very nice profit. Only reason why I want you to keep that in place is because markets tend to they tend to hold the rallies longer than one would anticipate, and they tend to hold declines longer than one would anticipate. And there were a lot of people calling for some kind of a turn here, and I thought, you know, the market is sometimes just perverse enough that, like the Qs, it could have been a recycle. So unless the Q is at 106, this is the power shares, QQQ Trust Series, the NDX 100 basically, unless by the end of the day there's a reversal, and instead of closing at 116.43, it closes above 116.78, that would suggest to me, wait a minute, it'll say, there is a chance that you could recycle and go to, this will turn into a B, a new high will be a C, and then a D. As you get, I call it the Bart Simpson hairstyle. I haven't even watched him for decades. Where it spikes up and the spikes and comes down, spikes up and comes down. They kind of zigzag to the top. So I just wanted to mention that. I'll be back. Basil Chapman, Tiger Technicians Hour. Very important period we're in right now. Be back straight after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
We're back, and I had a couple of questions, so let me just deal with them one at a time. Baba, which is Alibaba, trading in the monthly chart leg B. The weekly chart has got a very strong leg E above the 200-period exponential moving average at 84, and it's trading right now at 87.38, up $2.14. It must be good news. And it's in leg E in the daily. Now, could this have recycled? Not really, not yet anyway. So it's one of the stocks that's acting extremely well. A Chinese internet stock. It's like it's been on a tear. Remember back when it went over 100, went to 120, and then it plummeted down to the 50s. So this is a stock that has its own lifespan right now, a life cycle, and right now it's acting very well. So I'm not sure if the question was, what do I do, or do I buy it? I wouldn't buy it right now in leg E. I'd have to wait. But in the meantime, back at the range, I think there's really good support in the 84s. And because it's in its own orbit with the market down, it's up. I like it. And I would say that, let's see, give me a text, or tell me just in the den, I think it was J&J, just give me a yell if it comes back to the 84.40 to 83.60 area. Let's look at it again. In the meantime, it's looking really good. Next question I had was, where did it go? Ulta, ULTA, and an incredible stock. This is Ulta Salon Cosmetic and Fragrances. How I couldn't have just reacted just briefly once, how I couldn't have stayed with it, because I mean, this is the sector that's the last to tank of fashion, cosmetics, etc., fragrances. Leg E, whopping leg E in the monthly at 262.24. Whopping leg F in the weekly, and now it's gotten a peak C. All it needs is 283.57 for leg D, and it looks like it's making kind of a rollover. I'd say that this is just a tip-off to say that even the best stocks are finding it a little bit difficult here, struggling to make much higher highs. So this is a stock to be kept. I would not be buying it right now. Would I be shorting it? Short the very best of the very best? That's tough. If you want to put a very tight 1% stop on it, if it goes above 263.56, you can stop right there. You could short it, but 2-point stop maximum, because let me tell you, this price in the 265.80 area, 266s. It could keep going. It's just fantastic stuff. But it could pull back. And if it pulls back, you want to see 259.40. And you want to see it by Friday or Monday. All right? Now, another question. It's an email. Let's see. Where did it go? Greg. Dow Peak C. What does he say? What does he say? Oh, wrong mouse. Wrong mouse. Let me quickly get that. Good morning. If the Dow is an anomaly, not making leg D, and there is a pullback in all indices, this changes little except a pullback in the market. Listening to the show, can't call. Thanks. Greg immediately sends back an email saying, Last caller answered the question. Thanks, Greg. Yeah. So, Greg, it's a potential. It's close enough for me to call it a potential peak C1, peak C2. So keep that in mind. And there we go. So let me look at. Oh, did I lose my train of thought? Oh, the commodity index, TRCCI. We are long the commodity index, a mixed bag ETN. I don't know if we're going to hold it. We've got a nice little profit in it, but to tell you the truth, I don't think I'm going to stay. I'll probably want to get out of it tonight. I think that the commodities are under pressure. And it doesn't mean, gold is different. Gold doesn't act, the commodity index doesn't act just on gold alone. It's got all the commodities. So be a little careful. You've got peak A, B, C, D. Yeah, peak D in the 120-minute chart of the TRCCI. TRCCI is, in fact, the Thomson Reuters continuous commodity index monthly, and this has the Chapman wave notation, had made a very strong leg A from 351 all the way to 438. Very nice, 80 points, and now it's pulling back. But at this particular point, I want to see the evidence because the weekly chart is making me a little nervous. I think it could pull back a little bit more. The dollar, now look at the dollar, DXY. The dollar should be rallying, sort of fading. It's making that H pattern, which says that gold has the opportunity to rally, and it's struggling. It's up 5. Unless gold, I'd said that earlier, I can't remember if it was Larry's show or mine, but gold needs to get to it's a 1374.2 is the continuous contract peak C that it made. It needs to build, not just above it at 1376, it really needs to go to the 1380s. If it can get to the 1380s, then all of a sudden the left side cup formation kicks in, and you've got 1385 as a target. So this is going to be an important period for gold, for the dollar, all the way around. In fact, look at the EUR-USD currency pair. USD. Look, it's working its way high. It's above the 200-period moving average. And at 1.117, if it's able to go to 1120, it's going to probably test the last high of 1.123. And if you look at the USD JPY, that's the dollar Japanese yen, it's making the H pattern. So as I say, in my opening call, my daily newsletter, we are actually trying to garner as much cash as possible, and we were about to, well, we tried this morning, we missed, start for the first time in a long time starting short positions. Why? Because so many of the weekly charts are in Ds and Es that I think that if we pull back, it's going to be a little bit more serious than just a daily pullback. Okay? Just to make it real clear why and what my reasoning is. Now, here's the other thing. GE, which is a real bellwether for me, in my Dow bellwether out of my Dow quartet, GE, IBM, MMM, and UTX, has struggled. And it's saying, I'm having a difficult time. That's not me. This is GE. I'm at 31.25, down 5 cents. I should, in fact, have rebounded from that sharp pullback, 32.95, 2 points down to 31. I should be, instead of the little high that it made at 31.45, it should really be at 31.75 or higher. And it's not. It's at 31.25. And the weekly chart as an alternative count could be a D. It's looking more like a D than anything else. It's that monthly chart that's still very positive. So I think GE has had a spectacular move going from the 19s to the 30, almost 33 level. That is incredible. It needs a break. 100% gain? No, 19. Did I say 19? Yeah, 20 points. That is really, no, why am I doing this? This is 13 points. 13 points is really huge. So I think that GE can have a little bit of a breather here, and it's telling me more about the market. So do I want to go heavily short? I would just start implementing things and put in stops. That's the most important thing. And if we're looking at something like the XLF, and the XLF is very important. Why? Because the XLF is trading at 23.92, and it made a peak C and for some reason it doesn't look like it wants to get to a D, but if it gets to a D, that D can't just be 24.13, 1 penny above peak C. It has to be 24.45, 24.60. It really has to scream to the upside to show leadership. So I'll be talking about this in my webinar coming up on Tuesday night, only for subscribers, but you can subscribe and you can get a free one month. This is going to be a great opportunity. So check it out. XLF will be a clue to the coming few months. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Great. They
We're back. So
revised
just real
last
quickly, the
month
2-minute E-mini chart made a little double bottom here, like a
by
cut formation
14,000.
that then makes
Basically
an arch, which successfully tested,
5.514
doesn't
million,
break it,
up
and
from
now it should
5.5
rally. But
even.
this is tough stuff because it's done a number
a
of
little
times.
higher.
So I'll
little
give you
more job
numbers.
openings
The
that,
E-mini,
you know,
unless it
job
gets to
openings and labor
2174,
force
it needs to do
turnover.
it by about 1
So
o'clock.
it
And needs to
measures
hold there
job
as the VIX
openings
starts
and
to pull
offer
back.
rates on.
This is going to be a tough session. And if it breaks under 269, it's a 2168, I meant to say. It's at 2170 right now. That's not going to be very good. Okay, but then the question I had here, a couple of good questions. Sarah asked about USD. I just did that, JPY. So what about the Nikkei? Well, the Nikkei is a little bit independent in, Nikkei right there. The Nikkei is a little bit more independent in that if you're looking at it chart-wise, it is trading at 16,690, down 5 right now. This is the futures. 15,950 it's really the large context of the support. But real short term, 16,500, it goes under that. Then you can start looking at the downside. Upside, if it breaks above 17,080, then you can, 17,042 is the 200 period moving average. It's in the range. It's like many of the things right now. They're stuck in a range. And the TYX, the TNX I was asked about. The TNX is the 10-year. And that 10-year, look, it's just, it's that pattern I looked at a moment ago in the futures. This is the opposite. Here it's going to an arch pattern, but it just made it a successful cup pattern. Well, it hasn't made it successful. It'll be successful if the TNX trading at 15.20 at 1.52% goes above 16.28, 1.62%. That's going to be very positive. Closes above it, and that'll help the weekly. So just to sum up before we go off, and you're going to go to your swimming lesson. Oh, wasn't the swimming amazing last night in the Olympics? Yeah, so as we're looking at this, let's make it real simple. VIX index trading at 1222. If it goes to the 1245 or higher area, this market really pulls back. Then the Dow isn't just down 37, it'll probably be down 80. S&P will be down about 9. And if all of a sudden there's a balance, and that balance in the marketplace pushes the VIX down below 12, that can allow at least for the Dow to close up 25 points, S&P to close up maybe 1. This is going to be a very interesting day. It's very important to be watching everything. So we're about to wrap it up, and those are my VIX. That's the VIX attitude and analysis. But I'm going to say to you once again, the Dow, just because it's pulled back, it doesn't make this a peak C1, C2. It says there's a potential for that. And if there's a sharp pullback tomorrow instead of a strong bounce later today or tomorrow, then we have to consider it as important. But even if it makes that leg D above 18,622, I'm probably going to be saying, hey, it has to be a screaming move to the upside. Dow 18,730, 8,780, when it does break to the upside, that's what's needed to recycle up. Just sneaking above and then pulling back, not good at all. So this is a very important moment. But in my work, in terms of looking at the context of the different integral parts, that's different countries, the economics, what we're looking at politically, what we're looking at in terms of my long-term outlook that says, gee, I hate to say it, but I think capitalism is going to be under the next big phase. Capitalism gets really pressured as more socialism comes in. I spoke about that back in the Reagan years. I said eventually that's what's going to happen. And I hope I'm wrong. I really hope you turn around and say to me next year, oh, man, you were just so wrong. But I'm afraid that there are signs that that's going to happen. I don't want to be pessimistic, because I'm always a very optimistic person, but you got to look at the facts. And I'll go through the facts on Tuesday night, and we'll be able to assess them. Hey, have a wonderful day. Don't forget Steve's workshop tonight. I got one coming up next Tuesday night. Have a wonderful day. See you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.